Hello everybody, my name is Shu Hui and today I'm going to talk about the fundamental analysis of Fraser and Neff, which is also known as FNN. So before I talk about the fundamental analysis, I'm going to zoom into the company's profile. Let's zoom. So Fraser and Neff Limited, which is also known as FNN, is established by two enterprising young men called John Fraser and David Neff. So little did I know that it actually started from a printing business, publishing, and then it ventured into the F&B sector in 1883. Also, it ventured into dairy products and lastly, the properties segment in 1990s. So today, with its expertise and prominent standing in the F&B and publishing and printing industries, FNN is now the leading Asia Pacific consumer group that enjoy strong market leadership across 12 countries. Next up, along the years, many rich companies are fighting over the stakes of FNN and the control of FNN. In 2006, Temasek Holdings took 14.9%, 900 million stakes in FNN and became the second largest investor of FNN. It then sold all of its shares to Japan's Kirin Holdings for 1.33 billion in 2010. In 2012, ThaiBev bought over 22% of stakes from OCBC, owning a total of 24.1% of stakes. And last but not least, in February 2013, which is recently, Kirin Holdings sold 15% of stakes to Thailand billionaire called Charoen. And this guy, Charoen, has the control over ThaiBev and its partner TCC, and thus he is now the major shareholder of FNN. Next up, let's move on to the fundamental analysis. So fundamental analysis is different from technical analysis as it aims to evaluate a security by attempting to measure its intrinsic value. By measuring the intrinsic value, we will be able to find out in the end of this presentation whether its FNN shares undervalued or overvalued compared to its current market price. So for fundamental analysis, I'll break down into two segments, the quanti and the quali. So under quantitative, it involves analyzing numbers from the company's financial statements, and from there we can deduce the financial ratios like PE ratio, current ratio, and etc. etc. So for the qualitative, I will be using SWOT analysis to analyze. Next, let's look at the performance of FNN under quantitative analysis. For the valuation ratio, under PE ratio, PE ratio shows how much an investor is willing to pay for $1 of earnings. And last year, an investor is willing to pay $11.9 for $1 of current earnings. However, in this year, an investor is expected to be willing to pay $21.70 for $1 of current earnings. What does this show? This shows that investors are anticipating for a higher growth. And you can see that the PE ratio is increasing steadily from 2010 to 2012. And this also means that the investors are expecting higher forecast earnings growth over the years. And nonetheless, the expected PE ratio in the future will rise above $20. So next, let's move on to price to book ratio. Price to book ratio lesser than 1 as seen in the year 2013. It could mean that this stock has been undervalued as it is trading under its book value. This result could be due to the increase of book value per share. The low PB ratio attracts value investors as they identify these as potential stocks to invest their money in. Next up, let's look at the dividend yield. Comparing the dividend yield with FNN and its industry, FNN is paying much more higher range of percentage of dividends to its shareholders. Looking at the trend, FNN pays a range of 2.1% to 6% to its shareholders in terms of dividends. For dividend yield, investors would definitely love to invest in company that provides high payout in terms of dividend. However, dividends are not the only way to generate returns for investors. The gains in stock price can also provide profits to investors. Hence, this explains why stocks with low growth potential pays out a higher dividend yield, while stocks with high growth potential pays out a lower dividend yield. All in all, investors must be also aware that the company can choose to lower its dividend yield or eliminates it. Next, let's look at the leverage ratio. For the leverage ratio, we will be looking at debt to equity ratio. This compares the FNN's total liability to total shareholders' equity so as to measure their financial leverage. As seen from this graph, the debt equity ratio is decreasing steadily from 2008 till now and hitting 0.39 last year. The percentage is getting lower and lower, which means that FNN is using lesser leverage but at the same time gaining stronger equity ratio. However, by having low debt equity ratio, it might also mean that FNN is not taking advantage of the increased profits that a financial leverage may bring. Next up, let's look at the current ratio measures how capable is the company to pay off their short-term liabilities, which measures the liquidity of the company in terms of paying off its debts. Looking at the graph, the current ratio of FNN never seems to be a problem, and in fact it grew up to 3.2 in the year of 2013. The high ratio suggests that FNN is capable to pay off its short-term liability when they came due at that point of time. A high current ratio also shows that FNN is a highly liquid company which has enough resources to pay its debt over the next 12 months. Next up, let's look at the quick ratio. The quick ratio in 2013, which is 0.99, means that each dollar of their short-term debt is backed up by 0.99 cents of cash or near cash assets like accounts receivables. This percentage shows that FNN is not that liquid and FNN will not be able to repay all of its debt if they are to come to due immediately, even by using its most liquid asset. So this is all for the liquidity ratio. Next, let's look at the profitability indicator ratio. Zooming in, EPS, earnings per share, shows the net profit as per one outstanding ordinary share issued by FNN. EPS may be the easiest way to see how profitable a company is on a shareholders basis. Companies with high EPS ratio, their stock price will often rise. Hence, as FNN's EPS is rising, it shows that their stocks have future potential to rise, and the trend shows that FNN are regaining profits as their EPS are increasing from 2012. Next, let's look at the operating margin. For operating margin, it indicates the net profitability of operation of FNN company before interest and taxes on each dollar of sales. Hence, if the operating margin is good, it means that the company is profitable and earning more. Looking at the FNN's operating margin from 2010 to 2013, it is making $0.178 net profit on each dollar of sales in 2010. However, it drops to 13.2 in 2012. But nonetheless, in 2013, FNN seems to be making more profits as its operating margin rose up to 16.7, and this shows that FNN is making more and more revenue. Next, after operating margin, let's talk about the gross margin, which is the gross profitability. Gross margin shows the total sales revenue retained after deducting off its cost of goods sold. As seen here, the gross margin is more or less maintaining at the same or certain range from the trend line. From over this 10-year time, the gross margin did not have much change. Next up, let's look at the profit margin. FNN's profit margin rose up to 17.9% in 2013, which means that FNN has a net income of 0.179 of each dollar of sales. Profit margin ratio is extremely important for investors and creditors to analyze how effective or capable is the company in turning its sales into net income. With the increasing profit margin percentage from 2010, it shows that FNN is running efficiently with increasing profits. Investors will be interested in companies with higher profit margin. By looking at the profit margin, creditors can actually be relieved to borrow money to FNN as they will certainly have enough profit to repay back their loans. Next up, let's look at the ROA, which is the return on assets. It is a profitability ratio that measures how much profit FNN earns for every dollar of its assets like cash, account receivables, property, inventory, and etc. So from the graph, the ROA starts to decrease in year 2011 from 6.5 to 5.8 in 2013. In 2013, every $1 assets generates a profit of $0.058. This increase in percentage shows that FNN's ability to use its assets to earn profits is declining. So in order to improve ROA, F&N can either increase their net income without acquiring new assets or improve the effectiveness of existing assets. So next up, let's zoom into ROE, return on equity. As seen in this trend, F&N's ROE has been increasing steadily, reaching 51.6% in 2013. A ratio of 51.6 means that every $1 invested by the ordinary shareholders earns a profit of 0.516, which is very high. With a high ratio percentage, it shows that F&N are efficiently using its equity base and providing a better return for their shareholders. The ROE tells the common shareholders that F&N are effectively and efficiently utilizing their money to generate net income. Okay, that's all for profitability and quantitative analysis. Next up, let's zoom into the qualitative analysis, and I'll be using SWOT analysis to evaluate the strengths, weaknesses, opportunities, and threats of F&N Limited. Zooming into the strength. F&N is a renowned brand name, Fraser and Neef. Everyone knows about that. Everyone drinks F&N's product. With its well-known brand name, F&N can easily differentiate its product to suit the different types of market segment. Secondly, customer loyalty. With the amazing brand name, many people are extremely loyal to F&N. It will not be rare to find a bottle or a can of F&N drink in a house. Customers will continually purchase this product and will probably do so for a very long time. With F&N's ability to sell their products all over the world, in 12 countries, customers will continue to buy what they know and what they like. Thirdly, it is one of the top market leaders in 12 countries, over Asia Pacific, Europe, and USA. Next up, it provides a wide range of product line and services. As I said in the previous slides, it zoomed into the segment and industry of F&B, dairy product, beers, and etc. So under the soft drink category, it has 100 plus sparkling water. Under the dairy product, it has Nutri-Tea, Nutri-Soy, and etc. So it also has strong financial base. With this strong financial base, F&N will continue to strengthen its own brand name and continue in its research and development efforts to come up with new products to continue maintaining its market position. Sixth, F&N is also using the intensive distribution strategy, whereby their products and their brand name can be seen everywhere and is available everywhere. It can be easily become the recipient of product loyalty. Next, let's look at the weaknesses. As I've said earlier on, everyone is fighting for the shares. The big companies are fighting over the shares of F&N, and this creates an internal management problem. This problem results to the plunge of their share price, resulting from 860 in 2012 to today 290. And of course, there are other reasons that lead to the plunge, but this long-term fight over the shareholdings is also one of the reasons why investors lost confidence. Next, let's look at the opportunity. Firstly, expanding of market shares in various sectors. F&N Limited ventured into many industries and businesses. There's F&B business, the F&B drinks, real estates, the Fraser's Centrepoint, and etc. as shown in the previous slides. Secondly, Fraser's Hospitality IPO. This IPO is started in 14 July 2014, which is previously very recently, and the share price are seen to be rising modestly, and this is opportunity. Thirdly, the change of consumer taste. There are more and more healthy people are more healthy conscious, and this encourages F&N to come up with products that are low in sugar, low in calories, and going 100% original juice. Next, let's look at the threat. The threat will be their strong competitors. As I've said, they have many industry. So for the food and beverage, their strongest competitors is Coca-Cola, and of course, their strongest competitor in the property side would be the Capital Mall. Yes. So from all this, I hope that you enjoy my presentation, and that's all. Thank you.